Hey there YouTube. So in this video I wanted to cover traditional IRA contributions and the limits that apply to individual taxpayers. So individuals can make contributions to a traditional IRA. There's really no restriction on who can set up a traditional IRA. Whether you're covered by a retirement plan at work or not, no matter what your income is, you can always set up a traditional IRA plan. But there are certain limits on how much of a tax deduction that is available to you depending on whether you're covered by a separate retirement plan at your job and based on how much income you have. Okay, so that's the important thing to remember. And in contrast, so if we talk about Roth IRAs, you can't even have an account and put money into it if you make too much money, right? That's kind of the general rule. You have to have income under a certain threshold in order to even have a Roth and put money in. Traditional IRAs, doesn't matter how much money you make, it doesn't matter whether you have a retirement plan at work or not, you can always open a traditional IRA and put money into it up to certain limits. But the piece you need to be careful about is how much of a tax deduction, if any, you can take on your Form 1040 for the contribution. So traditional IRAs are retirement accounts where contributions are made with either pre-tax or post-tax dollars, right? And that depends upon whether the taxpayer gets a deduction, right? So typically when we talk about traditional IRAs, you're making a contribution and you get a tax deduction for it, so it's deemed pre-tax dollars. But again, that's not always the case. There are a lot of circumstances where you'll put money into a traditional IRA and you don't get any tax deduction whatsoever. So in that context, it's going to be post-tax dollars. Now, taxpayers can have both Roths and traditionals. However, the contribution limits, when we're talking about those, they're combined across the both. So if you have a traditional and a Roth IRA, the contribution limit is $6,000 for the year, and you get an extra $1,000 if you're over 50. That $6,000 cap is applied across both. So you could put $3,000 into a Roth, $3,000 into a traditional, or maybe $5,000 into a traditional, $1,000 into a Roth. That's how the contribution limits work. Now here's where the contribution limits, not the limits, but the deductibility of the traditional IRA come into play. So if you have an individual that is not covered by a retirement plan at work, okay, they can deduct the full amount of their retirement contribution to a traditional IRA without limitation. So if a single filer, let's say their modified AGI is over, let's say it's $200,000. Now, if it's over $200,000 and they're not covered by a retirement plan at work, they can still get a full deduction for the $6,000 they put into the traditional IRA. This table shows what your deduction limitation is if you are covered by a retirement plan at work. So in this case, if you have a single filing taxpayer and they make $200,000 and they also have a retirement plan at work, so they have a 401k. They can still put the $6,000 in the traditional IRA, but they're not going to get a deduction for it on their federal tax return. Okay, very, very important. And what they'll also have to do is file a Form 8606 to track the non-deductibility of the traditional IRA contributions. Now, if you have a single filer and they make $50,000 at their job and they are covered by a 401k, well, they can put the money in and still get a full deduction, right? Because their modified AGI is below the threshold. They're covered by a retirement plan at work, but because they make because their income is below this threshold, they get a full deduction. If your filing status puts you somewhere within this range, right, these middle ranges where you're more than X but less than Y, you're going to get a partial deduction for the amount that you put in. So very, very important to be mindful of what your modified AGI is, whether you're covered by a retirement plan at work, and are you putting money into both traditional and Roth IRAs or just one or the other, because all of these moving pieces will impact how much you can put in and what your tax deduction will be for the year. So that covers it for this slide, just high-level traditional IRA contribution limits. I hope you found that was helpful. If you have any questions, leave me a comment below, and I look forward to seeing you again on the next video. Thank you.